Henry Bedevisky. Jose will provide brief comments on our first quarter financial results, as well as address our strategic plans and progress thus far in 2019. Henry will review the quarterly results in more detail and discuss the substantive shift in our financial structure as a result of our recent initial public offering, as well as our outlook for the balance of 2019. We will take questions at the end of our prepared remarks. A telephone replay of this call will be available through the next week, accessible per the details provided on our earnings release, which was issued today. A webcast replay of this call will also be available on the Investor Relations section on our website at Cansortium.com through May 29, 2020. The earnings press release, along with unaudited financial statements and MD&A for the quarter, can be found on the Investor Relations section of our website and have also been filed on SEDAR.com. A reminder to our listeners that certain subjects discussed on this call, including some answers we may provide to questions, may include content that is forward-looking in nature and, therefore, subject to risks and uncertainties and other factors which could cause actual future results or performance to differ materially from any implied expectations. Such risks surrounding forward-looking statements are all outlined in detail within the company's regulatory filings, which can be found on SEDAR.com. The company does not undertake to update or revise any forward-looking statements except to the extent required by applicable securities laws in Canada. In addition, during this call, we will refer to supplemental non-IFRS accounting measures, including EBITDA and adjusted EBITDA, which do not have any standardized meaning prescribed by IFRS. EBITDA and adjusted EBITDA are defined in our press release as well as in the MD&A as filed on SEDAR. A reconciliation of EBITDA and adjusted EBITDA to consolidated net income reported in accordance with IFRS is included with our financial statements on SEDAR. It is also available in the Investor section of our website. As a final reminder on today's call, unless otherwise indicated, all dollar amounts are expressed in U.S. dollars. I would now like to turn the call over to our CEO, Jose Hidalgo. Jose?
Thank you, Jeff, and good afternoon, everyone. We're delighted to be hosting our first investor conference call as a public company, following our $56 million March IPO and last week's closing of an additional $27 million in convertible debentures. We appreciate the confidence that our investors have expressed in our strategy and our team's ability to execute. This is an extremely exciting time for all of us at the company as we embark on the next stage of growth for Cansortium. In the next few years since we founded the company, much has already been accomplished. For those who are new to our story, I'll provide a brief recap. We were awarded one of the first licenses in the state of Florida and today have cultivation, processing, home delivery, and 10 dispensaries in operation. We hold one of only 3 licenses in the state of Texas and today have cultivation, processing, and home delivery operations. Just last week, Texas passed new legislation that will make medical cannabis accessible for a significant greater number of Texas residents. More on that later in my prepared remarks. We're licensed in Pennsylvania and today operate 1 dispensary. We have applied for one of 8 clinical registered licenses that will allow us to become a cultivator and processor of medical cannabis, as well as provide us the right to open up to 5 additional dispensaries in high population centers. In Puerto Rico, we have cultivation, processing, home delivery, and 1 dispensary in operation. We were recently granted a cultivation, processing, and medical sales license in Canada and have begun cultivation activities in our newly renovated greenhouse located in Grimsby, Ontario. We have also begun laying groundwork in certain Latin American markets. In addition to our solid base of operations in multiple states and countries, I am perhaps most excited about our recent launch of Fluent as our new global brand, replacing the Nux Medical brand under which we have previously operated. Rebranding as Fluent represents the evolution of the company into a global cannabis leader with operations that cross borders, languages, and cultures. It speaks to the fact that our global society is becoming fluent in cannabis, learning and gaining a deeper understanding of its impact on health and wellness. Our expanding network of Fluent-branded dispensaries will continue to offer premium medical cannabis at a growing number of convenient locations that provide an unrivaled customer experience. Fluent branded dispensaries and products, including dried cannabis flower, recently legalized in Florida, are being unveiled throughout Florida and the company's other markets. Today, we're not just a multi-state operator. We're an international medical cannabis operation with a unified global brand identity, embarking on an accelerated growth phase. We invite you to learn more about our premium products and our modern dispensaries at getfluent.com. In a few minutes, our CFO and co-founder, Henry Batievsky, will review our first quarter results, which were generally in line with our internal expectations. I'm going to focus the remainder of my prepared remarks on our full year 2019 outlook and the factors that investors should use to gauge our progress. Our current outlook anticipates full year 2019 revenue growing to more than $80 million, a roughly four-fold increase from 2018 pro forma revenues of approximately $19 million. This outlook is based upon a strong set of existing capabilities and expanded distribution that we believe enable us to layer on growth. Our most significant near-term opportunity is to continue expanding our operations in Florida. We have recently tripled our cultivation capacity in Florida with the opening of our indoor Tampa facility with 60,000 square feet of cultivation area. This enables us to cultivate trimmed raw flower recently legalized in Florida, to augment our existing line of cannabis oils and derivatives. In addition, in July, we expect to begin cultivation in 27,000 square feet at a 70-acre campus in Polk City. So we're well positioned to have ample supply to match anticipated demand and our 2019 revenue projections here in our home state of Florida. Thus far, in 2019, we have opened 2 dispensaries in Florida, bringing us to 10 currently, and we expect to finish the year with 30 Florida dispensary locations secured. In Michigan, our in-market partner expects to receive final approval for 24 Class C cultivation licenses, an operating license, and a retail license to open up to 8 retail locations in the state, which will satisfy the conditions for us to complete our previously disclosed conditional acquisition and commence operations in Michigan. Looking further north into Canada, on May 3rd, we were granted a cultivation, processing, and medical sales license by Health Canada. Our Canadian license authorizes us to cultivate and process cannabis containing THC and CBD and allows us to distribute seeds and plant materials to authorized provincial, territorial distributors and retailers. In addition, we can sell cannabis in fresh, dried, or oil formulations directly to registered patients within Canada. We use a portion of our IPO proceeds to complete preparation of our Grimsby, Ontario campus, which consists of approximately 22,000 square feet of greenhouse cultivation capacity, 3,500 square feet for processing, and 8,500 square feet of physical plants. The campus is also prepared for phase 2, which is planned to be completed in Q4 2019. Once complete, this second phase will increase the total cultivation space to 100,000 square feet. Securing our Canadian license and commencing operation at our Grimsby campus is a significant milestone on our path toward becoming a truly global cannabis brand. We're laser focused in Florida, Michigan, and Canada in terms of achieving our projected 2019 revenues. At the same time, we continue to make progress and lay important groundwork in markets like Pennsylvania and Texas, which we expect will begin to contribute more significantly to the business in 2020 and beyond. In Pennsylvania, the 5th most populous state in the nation, we've operated a single dispensary in Hanover since June 2018, under a dispensary permit that allows us to operate a maximum of 3 dispensaries, limited to locations in the south central region of Pennsylvania. That permit allows us for the sale of medical marijuana only. we have applied for one of only 8 clinical registering medical cannabis licenses to be issued by the Pennsylvania Department of Health. This special category of license, if granted, would authorize us to grow and process medical cannabis for sale at up to 6 of our own Fluent dispensaries and to locate our dispensaries throughout the state as opposed to just one region. As a unique aspect of the clinical registering license, we're proud to be partnering with the Philadelphia College of Osteopathic Medicine to support research to better understand the medical benefits of cannabis. In Texas, we're one of only 3 licensed cultivators and have been generating revenue since January 2018 through a statewide home delivery service that we operate from Schulenburg, Texas. Last week, the Texas legislature, in a bipartisan supermajority mandate, approved a significant expansion of the Texas Compassionate Care Act, is awaiting the governor's signature. As passed by the legislature, the new law is expected to significantly increase legal access to medical cannabis products containing up to 0.5% THC for patients coping with certain chronic medical conditions and diseases. We believe this will significantly increase our addressable market in Texas. Beyond the United States, we're progressing in our current expansion plans in Puerto Rico and exploring other Latin American and European markets for longer-term expansion. So we have significant growth opportunities and are rapidly expanding our capabilities to execute against our strategic priorities and new opportunities. As many of you know, the cannabis industry in the United States and abroad is on the cusp of rapid and enormous expansion. While there are many companies attempting to get a stake in the ground, we have a strong first-mover advantages in several markets with high barriers of entry, including 3 of the 5 most populous states in the United States. We operate leading-edge cultivation facilities with on-premise laboratories to ensure the quality and consistency of our products. We're hyper-focused on the medical cannabis space and committed to producing premium products with best-in-class consistency of formulation. Our dispensary customers value both our products and the excellent customer service that they receive at our modern dispensaries as our employees guide them in their selection. The success of our company today, in less than 4 years from its founding, is indicative of our ability to seize upon the opportunities before us. We stand ready today to accelerate our growth by executing against our vision and striving to deliver shareholder value. Now, I'll have our CFO, Henry Vapievsky, speak to our first quarter financial results and your reaffirmed 2019 outlook. Henry?
Thank you, Jose, and thanks to everyone who joined our call today. We appreciate your interest and support. As Jose described, 2019 is off to a great start as we've continued to make significant progress investing behind each of the strategic cornerstones of our business. We've obtained additional licenses, increased our cultivation capacity, and are positioned to continue expanding our dispensary network in large markets with high barriers to entry. The financial statements that we issued today for the first quarter include comparisons to pro forma figures for the first quarter of 2018, which are a representation of consolidated results, assuming we had increased our interest in Knox Medical from 38% to 100% as of January 1, 2018, instead of the actual August 15, 2018 acquisition date. Our first quarter financial statements also include the balance sheet effect of the $10 million debenture we issued in February, along with the $56 million IPO in March 2019, and resulting repayment of approximately $44.5 million of short-term debt. They do not, of course, reflect the $27 million that we raised in last week's private placement of convertible debentures, which we plan to use to accelerate the expansion of our U.S.-based cultivation and dispensary platform and for general working capital needs. First quarter revenues of $5.5 million were generally in line with our expectations, up 65% compared to pro forma revenues of $3.3 million in last year's first quarter, despite residual negative impact of the previously disclosed partial crop failure we experienced in Florida in the second half of 2018. First quarter adjusted gross margin was 53.7%, compared to adjusted pro forma gross margin of 77% in last year's first quarter. The current quarter was unfavorably impacted primarily by the partial crop failure in Florida, as well as by various expenses related to our much smaller cultivation operations in developing markets. Selling, general, and administrative expenses totaled $15.5 million, compared with pro forma SG&A of $4.4 million in last year's comparable quarter. The increase was primarily attributable to incremental fees and expenses related to our initial public offering and costs associated with our business expansion, including additions of top cultivation and leadership talent. First quarter operating loss totaled $12.5 million, compared with pro forma first quarter 2018 operating income of $266,000. First quarter net loss totaled $16.6 million, or 10 cents per diluted share, compared with pro forma net loss of $6.5 million, or 5 cents per diluted share in the first quarter of 2018. Turning to our outlook for 2019, as Jose indicated earlier, and as we disclosed in our prospectus, we are reaffirming our consolidated 2019 revenue outlook for between approximately $80 to $82 million. We continue to expect full-year consolidated net income of approximately $6.5 and $7 million, and full-year EBITDA between $21 and $23 million, with both metrics being significantly weighted to the second half of the year. So in summary, we believe we're well positioned to embark on an accelerated growth path over the remainder of the year. I encourage you to read our first quarter MD&A that we filed at CEDAR earlier today, and that is also available on our website. It contains a thorough review of our first quarter results, and of course, we welcome any questions you might have. With that, let's turn the call over to the operator to take your questions. Operator?
Great, thank you. At this time, we will be conducting a question and answer session. If you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to move your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Our first question here is from Dr. Raul Saragasser from Paradigm Capital. Please go ahead.
Good afternoon, gentlemen. Can you hear me all right?
Yeah.
Great. Greetings from Portugal. It's a little bit late here, but I wanted to say congratulations on your inaugural earnings report. So I have a few questions, primarily around Florida, Texas, and Pennsylvania and Michigan. So you had provided some guidance around Florida and your ramp for the number of stores that will be opening. Could you maybe reiterate a little bit around the number of stores you expect to open over the next 1 and 2 and 3 quarters?
Yeah, sure. This is Henry, by the way. We expect to open 6 dispensaries in the next 6 weeks. We actually had our DOH site visit this morning for the 11th dispensary, and the 12th one, we have our inspection next week. So that would take us to 16 by the next 6 weeks, and then we are confident that we can reach to be 30 by the end of the year.
That's fantastic. And just given that you're looking at 30 dispensaries and potentially $80 million in revenue with a $300 million market cap, that it's clearly an undervaluation story here. So moving on to Michigan, are you able to sort of provide a little bit of color in terms of the number of dispensaries you think you'll be able to open over the 2019 period?
We are projecting 0 dispensary openings over 2019. All our projections are based on just wholesaling the flower that we harvest this year.
This is Jose. I'd like to add that we have our in-market partner have received pre-qualification for 8 dispensary licenses, and those should come in line, as Henry said, in 2020.
One other thing, just to jump back on Michigan, we mentioned in our remarks that we have 24 Class C licenses. Our projections are still only based on the 12 Class C licenses that we had a few months ago.
Great. That's very helpful. Thank you. And then in terms of Texas, clearly there's been a very significant change that's happening in terms of the legislation there, with a massive opening up of the market. So, given the relatively large opening up of the market and you being one of 3 licenses, do you have estimates in terms of what your penetration will be into that? What the size of that market will be given the expansion, and what your penetration will be into that market?
So, given how recently we found out about the new information, we do not yet have accurate estimates as to the timing or impact of expanded operations in Texas.
Great. Okay, so I think our math is sort of coming out at around 65,000 patients. So hopefully that's there'll be quite a material change there. And then finally, in terms of Pennsylvania, is there any sort of color you can provide? So you mentioned that there's a single dispensary there, and so is there any additional color you can provide in terms of Pennsylvania?
No, I think, as we said, we applied, as previously disclosed on April 11th for the clinical registration license, and we're expecting the results from that. As we stand today, we continue to operate the 1 dispensary in the South Central region of the state in Hanover.
That's great. Thank you very much for taking my questions today.
Thank you.
Once again, as a reminder, if you would like to ask a question, it is star 1. If there are no further questions, I'd like to turn the floor back to Mr. Hidalgo for any closing comments.
Thank you. I'd like to take this opportunity to thank you all for participating in our call, and I'd like to leave you with a few closing thoughts. Cansortium is extremely well positioned for growth, and even more importantly, we are at an inflection point of accelerated growth, propelled by our recent financing. We have strong first-mover advantages in several markets with high barriers to entry, including 3 of the 5 most populous states in the United States. We're committed to producing premium products with best-in-class consistency of formulation and to providing superior customer service in our sleek, modern, and conveniently located dispensaries. We have substantially increased our cultivation capacity. We're rapidly expanding our dispensary network, and we're poised to capitalize on expanded opportunities in Canada, Texas, Michigan, and Pennsylvania. As a result, we're uniquely positioned with strong competitive advantages, and we're poised to drive shareholder value. We look forward to sharing our progress with you each quarter going forward, and we appreciate your interest in and support of the company. Have a good evening.
This concludes today's teleconference.